Welcome back to Squawk Box. Breaking news. It's Friday, the last trading day of the week after a wild Thursday. The May import prices, expected to be up 0.6%, are up 1%. So it certainly seems though the last couple of months, down 2.6, down 2.4, maybe in the rearview mirror on import prices. Now let's strip out petroleum. It's up 1/10. So we could see the difference of headline 1%, up 1/10 when you strip out petroleum. And on a year-over-year basis, they were down 6%. Now let's switch gears to export prices month over month, expected up 0.5%, exactly as it arrived, up 0.5%, sequentially following a big down 3.3%. And on the year-over-year number, down 6%, which is the same as the import price year-over-year number. I guess the most amazing story, in my opinion, is we're hovering at, 144 right now in 30-year bonds, which means they're down 23 basis points on the week. 10s are down a similar amount. So we see that on the week, huge drops, and that's because last Friday, there was a jobs report that was rather powerful, and the lead into the jobs report not only buoyed, of course, stock prices, but it certainly pushed yields up intraday on a 10-year, for example, over the 90 basis point mark. So we definitely have lost some ground. As a matter of fact, maybe the most important thing to look at now is that 54 basis points is the all-time low yield close for a 10-year and 99 basis points for a 30-year bond. You could see that the differences between those points and where we're currently trading really underscores how certain parts of the yield curve, 30s to 10s, has really widened out over the last several months. Becky, back to you.
Hey, Rick, just asking, looking at this increase, sharper than expected increase in import prices, put that together with what we saw yesterday with the PPI. Do you worry about inflation at this point, or is this just something because of all the unusual activity and shutdowns that we've seen and maybe troubles in the supply chain to this point?
I think the latter is most definitely true, but I do think in the grander picture, the bigger picture, that ultimately the big growth in debt, the liquidity that's sloshing around, and especially how long it takes to get on the other side of the coronavirus, all those issues together will give us an inflation surprise. The question is when.